Okay. Is my voice audible? Is it clear? You want higher volume? No? Okay. So we'll start today's class. Yesterday we have completed with the concepts of companies, cost records and audit rules 2014. So today we are going to see the workbook. We don't want to revise, right? Do you want to revise again? Have you revised yesterday after going home? Have you opened your book? Doubt, ma'am. Okay. We'll see practical questions afterwards. We'll first complete the theory questions. Question number 7. We've already done with the question number 7, right? And question number 8. We have seen question number 7 and question number 8 in the last class. Did we? Did we see the class? Did you see those questions in yesterday's class? Yes, right? Now, moving on to the next question. Question number 9. December 2018 question. This question has been asked in December 2018 and June 2024 and June 2017. And what is the question about? What is the basis adopted to determine normal price with respect to related party transactions? Where did we cover this particular topic? Where? Related party transactions. In form CRO1, we have seen regarding heading number 24. We have seen what? Related party transactions. So, as per item 24 of CRO1, you have to mention that. Okay? As per item 24 of CRO1, normal price means what? A price charged for comparable and similar product in the ordinary course of trade and commerce, where the price charged is the sole consideration of the sale and such sale is not made to a related party. Normal price can be construed to be a price at which two unrelated and non-disparate parties would agree to a transaction, and where such transaction is not clouded to proximity of the parties to the transaction and free from influence. So these are the points which we have covered in the normal price definition. First, we have seen normal price means it is given for any product which is comparable under similar product. And the second, we have seen it is done in the normal course of business. And third, we have seen the price charged is the sole consideration of the sale. And the fourth, we have seen that the transaction is done between a unrelated party, like a client with an unrelated party. And fifth, the transaction is done without any proximity and influence. If all these are covered, then whatever the price charged to a transaction is called as a normal price. We have seen that, right? Now, the basis adopted to determine normal price shall be classified as under these methods. First is comparable uncontrolled price method, resale price method, cost plus method, profit split method, transactional net margin method, any other method to be specified. So this answer has been asked in 3 frequent attempts. Okay. Then, did we do that? You're getting the question right? From where did that question have been asked and what is the answer from? Okay. Now, question number 10. This has been asked in December 2019 attempt. See it carefully. Healthcare Equipment Limited is engaged mainly in the production of cardiac stents, catheters, pacemakers and intraocular lenses. So, there is a Healthcare Equipment Limited which is engaged into production of these. State below whether maintenance of cost records is applicable if the company fulfills turnover criteria. Did they ask regarding cost records or cost audit? Cost records. And where does this cover? It covers in Rule 3. So, cost records covers under Rule 3. And we have what? Rule 3. What is the provision for Rule 3? Overall annual turnover from all products and services should be more than or equal to 35 crores in the immediate preceding financial year. And we have 2 exceptions for Rule 3. What are those 2 exceptions? Foreign company having only a license office in India, and the second one is micro enterprise or a small enterprise classified under MSMED Act. So these are the two exceptions which we have. Now, what are the sub-questions they have asked for? A foreign company having registered office at Mumbai, do they have to maintain cost records? Yes, because it is not a liaison office, it is a registered office. Now, a company classified as a micro enterprise, do they have to do a cost records? A company classified as a micro enterprise is given as an exception, so they need not maintain cost records. A foreign company having only a liaison office at Delhi and Mumbai, no. A domestic company whose average turnover of 40 crores for last 2 years has dropped to 24 crores in the financial year 2018 and 19. Yes, if once it is applicable throughout. And whatever given here regarding this answer, whatever they have asked is regarding cost records. So we need not stress out in this. But if they ask regarding cost audit, then we have to know whether this is given from regulated sectors and non-regulated sectors table, isn't it? Now see whether this are available in regulated sectors table or non-regulated sectors table. Non-regulated sectors. And from where did this specifically asked us? From 33rd, medical devices. Do you remember the 33rd? The 33rd, whatever the non-regulated sectors table is there, in that last one is covered under medical devices, which is cardiac shunts, catheters, intraocular lenses, and pacemakers. This is what given in our question. So specifically, they will give the name of products and services, and they will test your knowledge regarding regulated sectors and non-regulated sectors. Okay, so that's what I've told you. Remember at least some of in the regulated sectors, so you'll know this is exactly asked from this in the non-regulated sectors. Okay. Now that's the answer. Healthcare services is a non-regulated sector covered under item 33 of the non-regulated sector, and any company, domestic or foreign, having annual turnover of 35 crores or more from all its products or services in the previous year shall maintain cost records. Therefore, the rule is applicable to a foreign company. Now, if any question is being asked like this, now see, if a question is like this, then that means a direct question, isn't it? So you can directly give your answer. First you will write the provision and then you will write regarding the answer. If it is asked regarding cost audit, then you will write the cost audit definition and then you will write whatever the question has been asked for. Now, if some questions, if they ask like this, then how you have to present it? First, what you can do is you can write the provision of cost records. Okay, you can write regarding this, stating it to be a regulated sector product or a non-regulated sector product, and you can write the provision for cost records. According to or as per company's cost records and audit rules 2014, rule 3, it talks about what? Maintenance or applicability of cost records, and this is the particular provision. What it talks about: any company, whether it is a domestic or a foreign company, which is engaged in specified goods or services which are specified in regulated sectors and non-regulated sectors, and if its overall annual turnover from all products and services from the immediate preceding financial year is more than or equal to 35 crores, then such companies has to maintain cost records. This will be your entire provision. And then what you can do is you will mention 1, 2, 3 and 4, and then you will write your conclusions for the answer. Clear? So if you are presenting in such a way, then you will have a neat presentation. Ma'am, sound is not clear. My dear, why sound is not clear? Is it still buffering or something like that? Can you again confirm me? Killer Core. Oh, that's her name, yaar. She mentioned that. Okay. Killer Core. Can you again confirm me whether my voice or the sound is clear or not? Now, whatever the way I have told you now, if you're presenting in such a way, the presentation would look a neat way, okay? So that's how you will do it. Whatever the question is, first you'll write the provision and then you'll enter into the answer. Don't directly enter into the answer saying yes or no. Like whenever I have asked this question, the first answer from your mouth was yes or no. But that's not how you'll present your answer. You'll not write yes. It's not clear, ma'am. Why the sound is not clear? Is it low or is it not clear? Sound is buzzing. Why? Just a moment, we'll check this. It's okay. Why it's not clear? I guess it's clear from my side. You file it, you find it somewhat, I guess some resound is coming. I hope it's clear now, or it's still just away. What's happening? It's okay now? Is it clear? Is it better from the past? Okay? I hope so it's clear now. Because I have done some trick. I've offed it again and on it again. Still the same. What can you do? I'm sorry for the sound. Okay, try to adjust and listen for now. What we'll do is, if it's now okay, please make sure. You're confusing yourself and you're confusing me. Okay, that's fine. Now, moving on to question number 11. This has been asked in December 2020. Now, what is this question about? While accepting the offer of appointment as a cost auditor of the company, what certificate should be submitted by the cost auditor to the company? Do he has to do so? Does a cost auditor has to give any certificate when he is being appointed? Yes. Consisting of what? Whether he is individual, firm or LLP, stating that he is qualified and not disqualified, and what, that the appointment is satisfied with all regulations and rules, and at last he has to give his consent that he is being appointed. The cost auditor appointed shall submit a certificate that the individual or firm, as the case may be, is eligible for appointment and is not disqualified for the appointment under the Act, the Cost and Work Accountants Act 1959, and the rules or regulations met thereunder. The individual or the firm, as the case may be, satisfies the criteria provided under Section 141 of Companies Act 2013 as far as may be applicable. The proposed appointment is within the limits laid down by or under the authority of the Act. The list of proceedings against the cost auditor or audit firm or any partner of the audit firm pending with respect to professional matters of conduct as disclosed in the certificate is true and correct. So these are the contents which should be given in the appointment of cost auditor. Now, if this question is being asked just for 7 marks. If you are writing only these 4 points, then you will not get the marks. So what you have to do, you have to elaborate the answer by writing more provisions of cost auditor. Like from the start, from the appointment, you have to write within 180 days from the commencement of financial year, cost auditor has to be appointed by board's resolution by board of directors. And then you have to write, while appointing cost auditor, the company or the board of directors must obtain what? A consent letter and a certificate from the cost auditor. And whatever the certificate is being obtained by from the cost auditor, it has to contain the following contents. Then you have to write this 4 points. Clear? So you have to elaborate according to the marks which is assigned for that particular question. If the question is asking for only 4 points or something like that, if you are writing only 4 points, you will not get the marks. So you have to make sure what is the question and you have to see for how many marks it is being asked and what is the content. If it is very big question, like they have combined 2-3 questions and asking as a single question, and if it is for 7 marks, if you are elaborating the answer, then you'll take a lot of time for that. Then what you have to do, you have to constrain taking only important points in your answer and leaving all the unrelevant points. Okay, so you have to make sure how you are going to present your answer. You have to keep in your mind the time constraint. At the same time, you have to make sure that you are including all the important points in your answer. If you are at last of the exam ending, like the last 10 minutes or 15 minutes, if you have a gap, what you have to do, you have to take a pencil or a pen, then you have to underline whatever the important points are there, so that the examiner or the invigilator who is correcting your paper will look into those underlined points which are very, very important. If you are not sure with the answer, then what you have to do, you have to write it at the last. If you don't know the answer, or if you are not sure what is the answer is, then that should not be in your first 3 or 4 pages. That should be in your last page. Okay? In such a way, what will happen? You will write all the correct answers in the front. Even if you are writing the wrong answer at the last, the examiner might think that, okay, only one question is wrong from his side, so I'll just give him a mark of 2 marks or 3 marks. So, we want the consent from him because our marks is depending on his hands. Okay, so try to make this gambling in your exam paper. Okay, don't do exact gambling, like real gambling, do in your exam paper. Okay, now question number 12. June 2018 has been asked for 8 marks. A company meets the threshold limit for both maintenance of cost records and cost audit in the year 2015 and 16, and consequently comes under the purview of rules in the year 2016 and 17. If the turnover of the company gets reduced to lower than the prescribed threshold limit in 2016 and 17, state whether the rules relating to cost records and cost audit will be applicable for the year 2017 and 18. Will that be applicable? Yes, it will be applicable. So, how much marks this question carries? It is asked for 8 marks. If you are just writing that one point, that whenever it is applicable continuously, then you will get only 2 marks for this question. Okay, so you have to write the provision first. What is the provision for cost records? What is the provision for cost audit? At last, you have to write that particular point. And when you are writing at last, you have to mention it as a star or something like that. This is the answer, whatever it is. You have to make sure that that is being highlighted to the examiner. See what is given in the suggested answer. Rule 3 of Companies Cost Records and Audit Rules 2014 states that the company engaged in the production of goods or rendering of services as prescribed, having an overall turnover from all its products or services of rupees 35 crores or more, during which the immediate preceding financial year shall include cost records for such products or services in their books of accounts. Since the threshold limit for the applicability maintenance of cost records is met in 2015 and 16, the cost records are required to be maintained for the next year 16 and 17. And once the maintenance of cost records becomes applicable, it would be maintained on a continuous basis in a subsequent years also. Following the same line, the cost audit will be applicable from 2016-17 and for every year thereafter. So, cost audit is applicable in 2017 and 18 also. Okay. Similarly, this is how your answer should be, but not like this. You'll not give it in entire paragraph. You'll segment it and write it in a point-wise manner. Okay. Before the examination, I'll also conduct the presentation. How you'll write the presentation. We'll take some important points. I told you that I'll give you super 50 questions, right? From that super 50 questions, I'll tell you how you have to present the practical questions and how you have to present the theoretical questions. Even if I'm telling you, you'll forget that before the examination. So now we'll understand the concepts and we'll understand how you'll do the practical questions. Maybe for examination, you know how to do it and you know all the concepts. Then you'll just focus on the presentation and all, then that would be fine. Okay. What would be the treatment of cost of consumption of electricity from a captive generating plant and the applicability of cost audit to such captive generating plant? Where did we see regarding captive consumption? Is it exception of rule 3 or rule 4? It is the exception of rule 4. Then you have to write it here. Here they have asked regarding applicability of cost audit only. They didn't ask regarding cost records. So we know not to mention anywhere regarding rule 3. We can mention only rule 4 and write the answer. As per Rule 3A2 of Companies Cost Records and Audit 2014, amendment dated, this is not required, dealing with generation, transmission, distribution and supply of electricity. All companies having captive generation of electricity, whether covered under audit or not, shall be required to maintain cost records if it is meeting the criteria. It may be noted that in case of company whose products or services are covered under rules and it consumes electricity from the captive generating plant, determination of cost of generation, transmission, distribution and supply of electricity as per CRA 1 would be mandatory, since the cost of consumption of electricity has to be at cost. Hence, maintenance of cost records maintenance of cost records is applicable. However, the cost audit will not be applicable to captive plants provided the entire generation is consumed captively and no portion is sold out. So you'll write the provision first and then you'll write whether cost records are applicable and cost audit is applicable. Clear? Now, moving on to question number 13. This has been asked in June 2019. During the course of audit as cost auditor, you have come across some material deficiencies and significant variation in material consumption over the previous year. State the provisions of company's cost records and audit 2014 in this regard. When we are discussing forms and in form CRA3, what is form CRA3 deals with? Cost audit report. So I have shown you what is cost audit report, and in that cost audit report statement or the form we have seen there are points. First point 2, 7 points there are, and at last in the down corner I have shown you that if during the audit, if cost auditor finds any material deficiencies, then he can mention it in point 1 to point 7. Do you remember that? Is it coming into your mind that we have seen that particular statement? So that I have told you while saying that provision, that this single point has been asked as a question in the examination, and that's this question. It has been asked in the 2016 syllabus in June 2019 attempt. Okay. So what is it? Pursuant to Rule 6.4 of Companies Cost Records and Audit Rules, you need not remember the rules and all. I'll tell you what are the important rule numbers which you have to remember. If you're remembering that, that's enough. Okay. So wherever we are getting sections and wherever we are getting the rules, I'll tell you what is important. If you're remembering that, that's enough. We doesn't have much sections and rules in the cost records and audit rules or the cost audit subject. So I'll tell you what our importance are. Just remember that. Okay. These are not required. Read with cost audit report in form CRA3. If as a result of examination of books of accounts, the cost auditor desires to point out any material deficiency or give a qualified report. What did I tell you regarding a qualified report? Qualified report, the name tells that everything is okay, isn't it? What is qualified? Qualified means he is qualified. What does it mean by you are CMA qualified? Which means you have done the exam well, isn't it? But when a qualified report is given by a cost auditor, that doesn't mean that everything is right. It means that whatever the statements and records are given for examination, everything is right. But there is some provision in that, which means at least a product detail or one transaction or single cost element regarding information or one disclosure is confusing or it brings some suspicion to the cost auditor. And cost auditor has asked to the management regarding the justification. Now, whatever justification has given by the management is not satisfactory to the cost auditor. So, what cost auditor finds? So, cost auditor thinks that that particular transaction is giving some suspicion to me. So, I am going to include that particular thing in my cost audit report. If any cost audit report is given in such a way, stating that there is some transaction or a disclosure or some information which is not right, but because of that transaction or disclosure, it is not affecting the entire cost records and cost statements. I am not telling that entire statements are wrong. I am telling that only that transaction is wrong. If cost auditor feels in such a way, then he will give a qualified audit report, not the complete entire cost audit report. Okay. So, if any cost auditor while doing audit, if he finds any material deficiency or he wants to give a qualified audit report, then he or she shall indicate the same against the relevant para 1 to 7 in the prescribed form. What is the prescribed form? Form CRA 3 of the cost audit report, giving details of discrepancies that he or she has came across. The report, suggestion, observation and conclusion given by the cost auditor under this paragraph shall be based on a verified data. Reference to which shall be made here and shall, wherever practicable, be included after the company has been afforded an opportunity to comment on them. So, in this entire para, what did they tell us? First point is, whenever a cost auditor is coming across any material deficiency or if he wants to give a qualified audit report, then he can mention such in form CRA 3 from the para 1 to para 7. That's the first point. And second point, if while doing cost audit report, then if he has come across any discrepancies, then he has to give details regarding that, like each and every detail. What's the reason behind that and from where did that he came from? So, what is the proof which he is showing that this is a material deficiency? So, the verified data, whatever he has analyzed, that has to be also given. And the third point is, so wherever it is there regarding that verified data he has to give. And the third point is report, suggestion and observations and conclusions. He has to give an audit report regarding each and everything. And fourth point, a reasonable opportunity of being heard should be given to the company. So these are the 4 points which you have to include in this particular answer. Clear with it? Clear? No doubts, right? You're understanding the question? Understanding the answer? Okay. Now, coming to question number 14, December 2023, ask for 7 marks. Explain the term normal capacity, the service installed capacity as defined in form CRA1. Did we discuss this while discussing form CRA1? I have told you regarding normal capacity and installed capacity. So, you have to write para 18, this is not required. Form CRA1 of Company's Cost Records and Audit Rules 2014. Don't write like this. Write it completely. Company Cost Records and Audit Rules states that installed capacity is determined based on four parameters: manufacture technical specifications, capacities of individual or interrelated production centers, operation constraints, or capacity of critical machines or number of shifts. I have told you regarding installed capacity. What is installed capacity? It is maximum capacity which it can be produced in a normal ideal conditions. Now, while determining installed capacity, all these parameters will be included. We have discussed that. What all parameters? First, manufacture technical specifications will be taken into consideration. Second, capacities of individual and interrelated production center. Why? Because not only the capacity of single machine will be taken into consideration, not only how many shifts it is running will be taken into consideration, it will also be taken into consideration what is the capacity of a production center, because that production center has to give its capacity to all the machinery, not only a single machinery. We have discussed that. So these are the four parameters which will be considered in determining the installed capacity. Normal capacity shall be determined with service installed capacity after carrying out the following adjustments. Now, what are those? Holidays, normal shutdown days and normal ideal time, Normal time lost in batch changeover, time lost due to preventive maintenance and normal breakdowns of equipment, loss in efficiency due to aging of equipment or number of shifts. These are what? These are nothing but interruptions which we consider. Clear? Did we discuss this? Right? Okay. Now, question number 15, December 2023 has been asked. The cost audit report in CRA 3 as submitted by the cost auditor contains more of management audit basics than mere data of production and services. Comment on same, justifying the reasons. So here they are telling us that whatever the cost auditor has included in form CRA 3, that is merely management audit basics. We have a separate unit called as management audit, isn't it? Now whatever they are telling us in form CRA 3, we have seen whatever in form CRA 3 is there. When we are discussing form CRA 3, I have told you regarding annexures, isn't it? What are the annexures to form CRA 3? It is divided into 4 parts. Part A, Part B, Part C, Part D. What is Part A? General information. What is Part B? Manufacturing sector. What is Part C? Service sector. What is Part D? Other details of information. So these are the 4 annexures to the cost audit report, isn't it? Now, whenever the cost audit report is being done, from where did the cost auditor gets the information of company? From the management. When getting into Part B, manufacturing sector, we have seen what? In the manufacturing sector, quantitative information should be given. Abridged cost statements should be given. Material consumption details, utility consumption details. These are all should be considered in the manufacturing sector and the service sector, isn't it? Are you rewinding it? You're getting the revision right? So, all this information the cost auditor can get included in the report only if management gives, isn't it? So what they are trying to tell by this question is, so whatever the report which is prepared in form CRA3 is that, it is merely given in the cost audit, like management audit, because whatever the work is done, it is done by the management. Now what cost auditor is doing, now whatever work done by management, whether it is true or not, that is being verified by the cost auditor. So they are trying to tell here in question that the cost audit report as submitted by the cost auditor contains the details, whatever Part A, Part B, Part C, Part D are there. Those details are merely of management audit basics, because that is the work which is done by the management audit. Is the statement justifiable or not? They are asking. So the answer is, the cost auditor has to report in CRA3 whether the cost accounting system followed in the manufacturing unit is adequate for determination of fair cost of production. First, we will verify whether the cost accounting system followed is true or not. Second, he has to report on the financial performance of the company as well as the product under cost audit along with various ratios and offer comment on the ratio. He has to check what is the financial position and he has to give the opinion on that particular financial statements. Whatever the cost statements are. He has to indicate the percentage of production in relation to installed capacity expressed in appropriate units of measurement. Now what is regarding the capacity also he has to verify and give regarding a opinion. Management by exception. He has also to state reasons for the shortfall in the production, bringing out clearly the extent to which they are controllable both in short term as well as long term. Now, whatever the verification is done by the cost auditor is done regarding cost records and cost statements, isn't it? Now, what the information will be contained in the cost records and cost statements? It will be regarding material, it will be regarding consumption details, it will be regarding labor, it will be regarding breakdown, it will be regarding maintenance. All kinds of information will be there in particular records, isn't it? Now, when doing the cost audit report, how will he know how to verify it? He will verify it based on the assumption of past data. Now what we will do, we will take the past data or past records and we will compare. Now what is the maintenance hours which is assigned in the previous year? Now for suppose maintenance hours are around 60 hours or something like that. For current year, the maintenance hours are only 20 hours. Because of maintenance hours reduction, what happened is there is a machinery breakdown, which means the company hasn't done the effective work, isn't it? So there is an opinion which has been formed to the cost auditor. Similarly, the labor's amount or the salaries which are given in the past period is some 15,000 rupees or something. This is just an example, 15,000 rupees. For current year, it is 20,000 rupees for the same labor. Now, what is the reason for improvement of salary? Is it done as per rules or just like that? He has to verify regarding that. If it is true, then that's fine. If it's not true, then there will be opinion on that. So whatever the information is there, because of that, he will find the differences, like he'll compare the statements and he'll give his opinion. Similarly, what is the shortfall in the production? He'll find whatever the reason for the production reduction. Now, when the cost auditor is being appointed, the management needs some kind of opinion from the cost auditor regarding production or regarding the new product brought in, isn't it? Now, why cost auditor is being appointed by the management? Because they want to know something regarding the company, isn't it? Now, one reason could be what? Whether the company is performing betterly or not. Second, what will be your suggestion after verifying the records and statements, whether can we bring a new product or not. Third is whether we can expand our company to bring a new branch or something like that. Fourth is what is your suggestion to improve the revenue. Fifth is cost reduction. So what is your opinion for reducing the cost? These are the suggestions which company wants from the cost auditor after verifying cost records and cost statements. So what he will do after doing the cost records and cost statements verification, he will state his reasons for shortfall in the production, bringing out clearly the extent of which they are controllable both in short term as well as long term. So I will tell why the production has been decreased. What measures you can take to increase the production even in short term and in long term. When you are getting into further units of cost accounting standards, cost auditor, you will understand this more easily. Okay. He has to give observations as regard as variations. Now he has to give whatever he has observed in particular statements and records. If any, in the rate of major raw materials, power, fuel, etc. in terms of rate per unit as compared to the previous year. He has to compare what is the material amount in the previous year and current year. What is the labor amount in the previous year, current year. Power, current year, previous year. Fuel, current year, previous year. He has to analyze each and every cost element. He has to express his opinion where did that particular lack of. He has to give details of wages and salaries. He has to indicate the amount of overheads along with reasons for any significant variations. Nothing but he has to verify everything which is there in the cost records and cost statements, and he has to explain what is the where the company is backing off. He has to express his opinion and give the suggestions regarding that. Now, what is the remedial actions can be taken by the company? In this case, the following position emerges. The cost auditor may offer suggestions as regard the following matters for improvement in the performance of the company under audit with reference to. So, we have seen in the cost audit report, not only regarding cost records and cost statements will be there, but regarding observations will be there, regarding suggestions will be there, regarding any qualifications are there, regarding that will be there. Each and everything will be included in the cost audit report. Now, if he want to give any suggestions for the improvement, then he can give these. Rectification of general imbalance in production facilities. Now, he can tell the production facility is not so correct. So, you can improve in these particular matters of production. Fuller utilization of installed capacity. Now, this is the capacity. Now, this is the 100% which you can utilize, but you are underutilizing the capacity. You can increase the capacity so that the production will also increase. This is the one kind of suggestion which can be given. Concentrate on areas offering scope of cost reduction. So these are the areas in which you can focus for reducing cost, increase productivity, and key limiting factors causing production bottlenecks. So there are these kind of bottlenecks in your production. Try to eliminate those bottlenecks so that the production will flow on continuously and you will not have any breakdowns in middle. Suggesting improved inventory policies. So after analyzing, these are the suggestions can be given by the cost auditor. Clear? Now in this question, what they have asked is, now whatever work which is done by the cost auditor is nothing but management audit, whether it is true or not, they have asked. The statement is true because whatever the work is done by the management is what? The statements and records should be correctly maintained. That is the work which will be done by the management. Now, who will prepare cost records and cost statements? Management will prepare. Now, whose responsibility to maintain that correctly with true and fair manner? Management. Now, who will verify this? Cost auditor will verify this. Cost auditor, after doing verification, we will go to the management and give us suggestions regarding that. If management follows that, then cost audit report will be different. If management is not following that, then cost audit report will be different. So, whatever the cost audit report is there, that depends on the management. Now, how management are collaborating or taking into consideration the cost auditor things. If management is not at all talking to the cost auditor or not taking the suggestions of cost auditor, then what will happen? The entire report which is given by the cost auditor will differ. He will give the RDI's audit report, which means whatever the records and statements are there, it is not true and correct. He will give that. Now, if management is taking the suggestions and improving, then the cost audit report will be different. So, whatever the suggestions I have given, they have followed it and they have taken into the records and statements. So, this is my cost audit report. So, everything is true and fair with the company. So, whatever the report which is Form CRA3 is there, it is nothing but depending on the entire management audit basics. So, the statement is true. Clear with the answer? Having any doubts? No doubts, right? If you have any doubts, you can ask me, I'll repeat. Okay? So, this is our last. Okay? So, these are the theoretical questions which are being asked from what? Unit 2 companies, cost records and audit rules. Okay? So, we have rules, we have forms. You have to focus on all rules and all forms because question will be asked from it. And from rules, what are the most important rules is Rule 3, Rule 4 and Rule 6. Okay? So, these are most important because questions are being asked from that. Okay? And coming to forms, Form 3 is very, very important form. Okay? Focus on that mostly. Keep it as A category and rest you can see. Okay? Clear? Having any doubts? No doubts? Okay. Now, moving on to practical question. First, we'll see value addition. Now, what is value addition? We have already discussed what is value addition is. Now, what is value addition? What? Yeah. So, whatever the raw materials are bringing into the company, to convert it into finished goods, we will put some cost in the middle. Due to incurring of that particular cost of converting raw material into finished goods, there is some value being added to the entity or the management. So, that kind of thing is called as value addition. Increase in value of business by transforming raw materials or inputs into finished goods or services. Now, how we are going to calculate the value addition and distribution of earnings. Now, whatever the calculated value addition is there, that will be distributed to different claimants. For example, to the employees, it will be given as salaries and wages. To the shareholders, it will be given as dividend. And to the bank, if any loan is taken, will be given as an interest form. To the government, it will be given as taxes. So, whatever the value addition is there, that will be distributed to each and everyone as a earnings. Now, how we are going to calculate value addition? First, revenue from operations, which is nothing but sales, we'll take that. After that, less taxes and duties. Whatever taxes, duties are there, that will be reduced if it included in the net sales. If it is not included, will not. Then we'll get net revenue from operations. After that, we'll add export incentives. Now, what are these export incentives? Export incentives are nothing but some incentive which is given by the government to increase the exports for the company. Now, what government wants? Government wants to reduce the import and increase the exports so that the GDP will increase or the entire global development will get increased. Now, to improve or to motivate the companies to get into more kind of exports, some kind of incentives will be given by the government to the company. If there are any export incentives which are received. Now, what are the examples of export incentive? There are duty drawbacks, isn't it? Now, what is duty drawback? No idea of duty drawback? Now, whatever exported goods are there, we have to pay some excise duty for that, isn't it? So, whatever the excise duty we are paying, that will be refunded to us. That is called as duty drawback. And tax exemptions are given. Refund of taxes given. These are all nothing but export incentives. And for some kind of goods, so if you are preparing any good which is going to be exported outside, so for example, there is a car. This car is being manufactured for export purpose. Okay, so I am manufacturing this car keeping in mind that after completion of this particular car, this will be exported to outside world. But whatever the material I am using for this particular car is not available in the India. So what I have to do, I have to import that material to manufacture the car first. So what I will do, I'll import material from the outside, and whatever the material, imported material using in this particular car manufacturing, after completion of car, that will be exported to the outside. In this particular case also, some kind of incentive will be given to the government. If they are bringing imports, some kind of subsidy will be given, because the import which is being done is only to export it to the outside world. So in this case also, there is some incentive which is given. So all this combinedly is called as export incentives. To increase exports, they are giving some incentives. Government is giving some kind of incentives. So this is also included in the revenue of the company, because it is also adding some value to the company, isn't it? Suppose, for example, if you are a business, if you are an entrepreneur, you are having a business, you are manufacturing a car, and you are receiving subsidies from the government. Will the public not believe you in manufacturing? Government is believing you and giving you the amount. Will public or the shareholders or the stakeholders will not believe you? Yes, you can tell that government is giving me subsidies. Government will only give you incentives and subsidies after verifying your records, isn't it? It will not give you just like that. You have to send some records showing that whatever the incentive is given to you, you are utilizing it for the same purpose. You should not use it for a different purpose. So whatever the purpose for which incentive is given, you have to utilize only for that purpose, isn't it? That will be only done if you are showing proper records and statements. So your records are with the government, which means government is trusting you and giving you the incentive. That will be an added advantage to the public or the shareholders or the investors to rely on your company. So this is also a value addition to the company. So we'll add these export incentives to the net revenue from operations. Clear? Now, after that, add or less adjustments in the stock. Now we have two stocks. What is it? Opening stock and finished goods. Opening stock and finished stock. Now, regarding this adjustment, do you know how this adjustments works? Increase in opening stock, increase in finished goods, decrease in opening stock, decrease in finished goods. How will it reflect with the profit? Do you know that? No idea? Having idea, but there is a little confusion, so we will not open our notes. Is that right? Okay. So, I am going to tell you a trick for that. Okay. Now, whatever opening stock is there, where will this opening stock be recorded in the profit and loss account? Debit side or the credit side? No idea, ma'am. This is a lot of confusing. Why are you asking the technical things? Okay. Now this assume to be this a profit and loss account. Okay. Now where is debit and where is credit? Give him a big round of applause, please. Debit is debit side, credit is credit side. Okay, this is debit and this is credit, isn't it? Now, here there will be opening stock. In here there will be finished stock, isn't it? Where will be the profit? Here will be the profit, here will be the loss, isn't it? Now, if opening stock is increasing, then the profit will also increase. If opening stock is decreasing, then the profit will also decrease. If finished goods are increasing, then it is having a different effect. It is giving it is in debit and it is in credit. So if finished stock is increasing, the profit will decrease. And if finished goods is decreasing, profit will increase. So just remember this. Don't get into more technical things. Okay, you have done your account subject. Okay, so don't get into more technical things if you are going to group 4 and oh shit. Okay, then you have other subjects called as SPMDV and you have SFM, BT. In those you can go into more technical, not this accounts. This is simple subject, so we'll not get into more technical things. Okay, so remember, if opening stock, whatever the adjustment in opening stock that it is there, it is directly with the profit relation. Okay, and closing stock adjustment will have adverse relationship with the profit. If opening stock is increasing, profit will increase. If opening stock is decreasing, profit will decrease. And if closing stock is increasing, profit will decrease. And if closing stock is decreasing, closing stock will profit will increase. Okay. Now, add or less with the adjustments. Wait, I am only confused. Now, finished stock and profit will have the same effect. Opening stock and profit will have adverse effect. I have told you in a reverse way. Okay? Opening stock and profit will have adverse effect and closing stock and profit will have the same effect. Because if this is opening stock and here it will be closing stock, right? Now, for example, if profit is here, closing stock should be higher. Only then you will get profit, isn't it? Isn't it? If closing stock is higher, you will get profit. If closing stock is lower, you will get loss. In profit and loss account, credit side should be higher. Only then you will get profit. Debit side should be lower, isn't it? So if closing stock is increasing, profit will increase. So whatever credit side is there, if it is increasing, profit will increase. And if closing stock is decreasing, profit will decrease. Okay? I'm sorry for confusing you. I have confused. That's why. So whatever credit side will be there, that will have the effect on the debit side. Because credit side is more, only then we'll get the profit, isn't it? If debit side is higher, we'll get loss. So if closing stock is increasing, profit will increase, and closing stock is decreasing, profit will decrease. And opening stock and profit will have adverse effect. Okay, clear? Now, here you'll add or less the adjustments. So regarding that, if closing stock is there, profit will have the same effect, and if opening stock is there, profit will have the adverse effect. Based on that, you will add or less the stock adjustments, and then you will move to less cost of bought out inputs. Now, what are the bought out inputs? What all are you purchasing from the outside will be your cost which is given to the outside, right? So raw materials will be from the outside. You will take that out. Process materials or chemicals, you will process the materials or the chemicals by the outside only. Then you will eliminate that. Consumption of stores and spares, you will eliminate. Utilities, power and fuel, you will eliminate that. Others, if any. So whatever the cost of bought out inputs are there from the outside, you are giving the cost to the outside. That will be eliminated from the sale value. Then you will get the value added. So net revenue from operations, you are adding some export incentives, you are adjusting the closing stock and opening stock, and then you are reducing cost of bought out inputs. Then you will get the value addition. Clear? Then add income from other sources. So whatever income from other sources is there, that you will add with the value addition. Then you will get the earnings available for distribution. And this earnings will be distributed to employees as salaries and wages, retirement benefits, shareholders as dividend, company as retained funds, government as taxes, exceptional and extraordinary expenses if any, others if any, and total distribution of earnings. Clear? So first you will calculate the value addition, then whatever the value addition is there, for that you will add the what? Income from other sources, then you will get what? Earnings available for distribution, and then you will distribute that earnings to different claimants. Clear? So this is the entire statement of value addition. Clear with value addition statement? Okay, we'll go to the problem and you'll get the idea. Okay, so this is the first question. Open your books and open your calculators. Okay. You have your calculators, right? No doubt in it. Question number 1. First, we'll see what is given in the question. Okay, this has been asked in June 23, December 2018. The following figures are obtained from cost accounting records of Vanilla Limited. Amount is given in rupees in lakhs. So we have 2 years data, 2023 and 2022. Net sales are given for 2 years. Other income is given. Where will we consider other income? Income from other sources. After where? Like after value addition, you will add this in other income and you will get earnings available for distribution. Export incentives, what will you do? Add export incentives. Increase in value of stock of finished goods. So if finished goods are increasing, profit will increase. So you add or less, add to the stock. Okay. So raw materials consumed, you will take it as less cost of bought out inputs. Raw materials consumed, you will do this. Direct wages, salaries, bonus and gratuity. Where you will consider this? Earnings available for distribution. Power and fuel, less cost of bought out inputs. Stores and spares, less. Other manufacturing overheads, you will also consider overheads to be. So 645 and 555. Administrative overheads. Here audit fees. Where you will take audit fees? No, audit fees will be taken in the value addition only, like less cost of bought out inputs. How? I'll tell you. See, employees are working in our own company, isn't it? Audit is not done by internal people. Audit will be done by whom? By the external. Here it is not mentioned as internal audit, right? So audit is done by whom? By external people. So they are coming to our organization and they are working for our organization and we are paying them. So that is what? That is cost which is going outside. Now, whoever the employees are working in our organization, directors, or the whoever managerial person will be there. For them, if we are giving salaries, that is given from our earnings. But for outside people, it is a value addition. So to improve my audit or to improve my records, to show that my records are true, I am bringing an outside person to do audit for my thing, isn't it? So this is a value addition thing. So this is given to the outside world where it is a cost of bought out input. So we'll reduce this audit fees. Clear? Salaries and commission to directors, earnings available for distribution because directors are working for our organization. Other overheads, selling and distribution overheads, in which salaries and wages, we'll take it to earnings available for distribution. Packing and forwarding and other overheads, we'll take it in cost of bought out inputs. Then total depreciation. Depreciation will also be considered as earnings available for distribution, but that will not show in the table. Okay, that will be also taken afterwards. That will not be there in the value addition. Interest charges, in which on working capital loans from banks, whether it will be considered in value addition or earnings available for distribution. It is working capital loan. What is working capital loan? Loan taken for which purpose? For day-to-day operations, which means it is there in the production, isn't it? So that is done in the converting raw materials to finished goods. I've used that money in the production purpose. So what is value addition? Whatever the cost I am putting to convert this raw material into finished goods is value addition. So working capital loans interest will also be considered to be a value addition. On fixed loans from IDBI, it will be taken to earnings available for distribution because it are fixed loans. On debentures, earnings available for distribution, tax paid including provisions, earnings available for distribution, dividend paid and dividend distribution tax. These two will also be earnings available for distribution. Now you are required to calculate the following parameters as stipulated, part D, para 3 of the annexure to the cost audit report. Now what is part D, para 3? Value addition. Under the company's cost records and audit rules 2014 for the year ended March 31st, 2023 and March 31st, 2020. They have asked regarding value addition, earnings available for distribution and distribution of earnings to different claimants. Shall we do? We'll do. Now, how you have to present this answer? First, you'll write as per Part D, para 3 of annexure to cost audit report. Under company's cost records and audit rules 2014. If you have place, then continue and write company's cost records and audit rules. Okay, don't split it right and right, write it continuously. As I don't have the space, I've write it in that way. Write it continuously, only then it will look good. Annexure to cost audit report under Companies Act, Companies Cost Records and Audit Rules 2014. Now, statement showing put it as first because they have given the bifurcation, right? 1, 2 and 3. So write it as first statement showing computation of value addition for the year ended March 31st, 2023 and March 31st, 2022. Heading is very, very important. If you're not writing the heading for statement, then you lose marks. Okay? And here if you want, you can write Vanilla Limited also. Like starting, you'll write Vanilla Limited and then you will go into that. Because the company name is also given here. So, cost accounting records of Vanilla Limited. So, you can write starting heading as Vanilla Limited here. I can adjust. Okay. So, this is how you will write. And rupees is given in lakhs. This is also important. Then you'll write particulars 2023 and 2022. Particulars, amount 2023, 2022. Okay. Now, what is given first? Net sales. $7,120 and 5,700. And then from here, we don't have any taxes, so we'll take export incentives. Add export incentives. Export incentives are 80 and 60. Then we'll write adjustment and stock. Add increase in value of finished goods. It is 30 and 15. Now tell me the total of this. $7,232. $5,000. Okay. Now here we'll write less cost of bought out inputs. Okay. Cost of bought out inputs. You'll write first raw materials consumed. How much is raw materials consumed? It is 2,640 and 2,160. 2,640 and 2,160. Now, next it is power and fuel, 360 and 288. $360 and $288. And then we have stores and spares, 240 and 210. Stores and spares, 240 and 210. Then we have other manufacturing overheads, 645 and 555. $645 and 555. And then we have audit fees, administrative overheads, we have audit fees. So we will write first administrative overheads. In which we have audit fees. How much is audit fees? It's 54 and 45. And then we have other overheads, 390 and 330. $390 and 330. And then we have selling and distribution overheads, packing and forwarding, other overheads. So in selling and distribution overheads, Are you following? We have packing and forwarding. How much is packing and forwarding? 30, 24 and 375 and 300. 30, 24 is packing and overheads. This is other overheads. 375 and 300. Then what will we have? Depreciation will not consider. Then interest charges on working capital loans from banks. How much is working capital loans from banks? 90 and 75. Clear? Now give me the total of cost of water inputs. So I'm writing it in the other page, but you have to continue it, okay? Now you'll write total of cost of bought out inputs. How much is the total? 824, and in 2022 it is 3,987. And then you'll write value addition. Value addition is total of A and total of B. Net revenue from operations minus cost of bought out inputs. $2,000. In here 1,007. So this is the value addition. Clear with value addition? Then what you have to do is second statement showing earnings available for distribution. Then again you have to write particulars, amount, rupees in lakhs, 2023, 2022. Then first you'll write value addition. Value addition is 2,406 and 1,788. Then you will write add other income or income from other sources. Now what is the other income given in the question? It's 450 and 300. 450 and 300. And this will be your earnings available for distribution. What is earnings available for distribution? 2,856, and here Okay. Now, third is statement showing distribution of earnings to different claimants. Particulars 2023 and 2022. Amount rupees in lakhs. Okay. First, we'll give it to salaries. So direct wages, this is 1. Do the total. Salaries, this is 1. And then we have salaries and commission to director. And then we have salaries and wages. 660 plus 72 plus 54. 780. So employees as salaries and wages. How much is 650? 676 and okay. Now, next, after that, we have considered net sales, other income, export incentives, increase, raw materials, power and fuel, stores and spares, other overheads, administrative, audit fees, other, this is also considered, packing and forwarding considered. Total depreciation will not take here. Interest charges on working capital. Now, interest on fixed loans from IDBI. Interest charges on fixed loans from IDBI. How much is it? It is 135 and 105. 135 and 105. And then after that, on debentures. So shareholders, sorry. Debenture holders as debentures, 45 and 45. Next, government as taxes. How much is government taxes? 474 and 300. Next, dividend paid. How much is the dividend paid? 630 and 345. And then dividend distribution tax. It is 110 and 60. It is okay. Now do the total of this. The total, entire total should be earnings available for distribution. Here, there will be some amount as company retained funds. Okay? Company will take something as retained funds. So, the balancing figure which will be there, that will be this amount. But you should not write there as balancing figure. For company as retained funds, you have to do the working notes. Now, how you will do the working notes for companies at retained funds? Here, company as retained funds, including depreciation, you have to write. So, the next page, you will write as working note. Computation or calculation of retained funds. Then you will write particulars 2023 and 2022. Then first you will take earnings available for distribution. How much is it? 2856 and 2088. And from this, you will do the less of whatever we have taken till now. You will reduce the depreciation, you will reduce salaries, you will reduce dividend distribution tax, you will reduce other tax. All whatever we have taken here, including depreciation, will reduce everything. Then don't take depreciation, but include depreciation in this particular. Okay, add depreciation and less everything, then you will get retained funds. Now, first, what is the depreciation? What is depreciation? I'm asking you because you don't have books. Okay, wait. Employees and wages and salaries. Salaries are 786 and 633. And then after that, what we have read? Then we have written interest charges. Tell me what is interest charges? After that? How much is debentures? Next. How much? Next. How much? Next. How much? Now how much is the total? Here it is. Here? No. This, if you are reducing it, if you got this, or total of this? Total of this is 2180 and 1440. Okay. Now, depreciation given us 180 and 180. Add this 180 and 180. Are you getting 2856 and 2088? No? You're not getting that? Then you have done some calculation mistake. Did we get value added at 2466 and 1788? Is value addition right? Next, 2856 and 2088 correct. Salaries 714 and 573. What is salaries? 786 and 633. Okay. Next, dividend 630 and 345. Right. Company has retained funds 676 600. Government has taxes 110 60. Income taxes 474 300. Then Debentures, fixed loan from IDBI. Did you take everything? Company has retained funds, we are calculating now. Okay. Now, employee cost 714. Is employee cost 714? Now, in this employee cost, the director's salaries they have included separately. They have given. We have taken it as one. 714 and 72 is 786. Now, dividend 630. Taxes 584. They have combined. Interest 180. We got 676. $786. Interest charges. Dividend 630. And taxes 584. Taxes. This and this. Combine this. You get 584. Yes, it's 584. Then consider debentures. Okay, this is interest on debentures. This is not considered. 45 and 45. Eliminating this, calculate. How much you are getting? Do the total of this first. 714, 720, 72, 630, 584 and 180. Hmm? 2856 minus 2180. I would ask you the total. You told me it's not getting 630. The total is 676. I told you what? 2856 minus 2180. You have to get. I told you 2850 minus 2186. How much it is? Here it is 2180. Here it is how much? Here 600. So this is company as retained funds. And then you will take this company as retained funds here. 676 and 600, and you have to get this total of 6856 and 2800. Are you getting this total? After adding all this, if you add this total, then you have to get this 2856. Okay? Then that is company as retained funds. Clear? So this is how you will do the value addition. Clear with value addition? Any doubts? Here, company has retained funds including depreciation. Depreciation will not distribute to anyone. Depreciation will take it in the records, will not give the depreciation amount to someone like that, isn't it? For if we have 10,000 rupees, I am giving to employees 786 rupees, and for interest I am giving it as 185. From my earnings I am distributing it. Depreciation will not distribute. Will take it as from the earnings and record it in records. Okay, depreciation amount will not take more, so will not include it in distribution of earnings. So including depreciation, this is company as retained funds, and then you have to write company as retained funds 676 and 600. Then you will get earnings available for distribution as 2856 and 2088. Clear? Any doubts? Clear? Do you understand how we are calculating that? But you have to write, you have to not take this company as retained funds as balancing figure. You have to do the working note for that, and then you have to write it as earnings available for company has retained funds. Clear? Any doubts? No doubts in solving this problem, right? Is it easy or is it tough? Easy, tough, moderate. A, B, C. Moderate. B. Okay, moderate you are telling. Okay. If it's easy, I'll give you homework. If it's not, tomorrow we'll do it and again after that I'll give you homework. What do you say? We'll try it at home or we'll do the other sum and you'll try it at home? We'll do the other sum and then you'll take the homework. Okay. So try to do this again. So try to do this again after going home. If you're finding any doubt, then we'll discuss again with the next sum tomorrow. Okay? Is it clear? No doubts, right? Okay. You can take break today. So we have completed theoretical part and we have done the value addition problem. Tomorrow we'll continue with the value addition and we'll take the profit reconciliation problems. Okay?